Americans for Fair Taxation presents the weekly Chairman's Report, written by Steve Hayes, president of Americans for Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida Fair Tax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, March 13th, 2026. Social media influencers and what is a business deduction. Social media influencers are making more money, but they're learning that most of it is taxable because many of the expenses they believe are needed for their job are not deductible. The Wall Street Journal recently ran an article discussing the impact of federal taxes on social media influencers. Here are some of the points from that article. According to Goldman Sachs, the creator economy is projected to reach nearly $500 billion globally by 2027, doubling its 2023 size. Nadia Okamoto has more than 4 million followers on TikTok and says there is not a lot of separation between my life and content creation. Like others who are self-employed, influencers pay taxes on the money they earn after deducting their legitimate business expenses. But when makeup, pets, and meals play starring roles in social media posts, figuring out what counts as a legitimate business expense can get rather difficult. A quarter of influencers say that taxes are their top source of business stress, and nearly 25% say they've made tax mistakes that have cost them money. That's according to a recent H&R Block survey. Now, influencers are operating a business. They pay federal income taxes on their income after allowable deductions. But the question is, when does an expense meet the definition of a legitimate business expense? In many cases, it's rather difficult to know. Now, the IRS operates on the principle that deductions are a matter of legislative grace, meaning the burden is entirely on the taxpayer to prove their eligibility. Now, the business deduction test is contained in the Internal Revenue Code Section 162. First, the expense must be ordinary. The IRS defines ordinary as an expense that is common and accepted in the taxpayer's specific trade or business. Second, the expense must be necessary. For an expense to be necessary, it must be helpful and appropriate for the trade or business. It does not necessarily have to rise to the level of being vital to the survival of the business. Now, influencers are providing influence in many different areas. Some are recommending travel, others recommend clothes or numerous other things. Since this is a relatively new area, there's not a lot of precedent to lean on in trying to determine what is ordinary for a particular influencer and what is necessary, since almost anything can be helpful. What is ordinary and necessary for one influencer may not be ordinary and necessary for another one. Now, many choose to play audit roulette and just take a deduction with the hope that the IRS never questions it. Now, using that approach, an influencer speaking to dog owners, for example, can deduct the grooming for their dog that always appears in their videos. But if they get audited and the auditor disallows that deduction, the resulting penalties and interest could easily add up to more than they saved on their taxes by taking the deduction. Now, many influencers operate from their home. This is another complicated area in the law. The deduction for the business use of a home remains available to taxpayers who use a portion of their residence exclusively and regularly as their principal place of business. The exclusive use requirement is strictly enforced. If a room is used for both business and personal activities, no deduction is permitted for that space. Now, influencers must choose between two methods of calculating this deduction. The regular method involves allocating the actual cost of the home, such as mortgage interest, property taxes, insurance, utilities, and depreciation, and that's based on the percentage of the home used for business. The simplified method, introduced in 2013, allows for a standard deduction of $5 per square foot for up to 300 square feet, capping the deduction at $1,500. Under IRS Topic 305, influencers must maintain records, such as receipts, canceled checks, and invoices, that substantiate every item of income and deduction on their return. They have to keep income tax records for 3 years because that's the general statute of limitations. Substantial understatement records have to be kept for 6 years, and those apply if 25% of gross income is omitted. Employment tax records got to be held for 4 years. That's required for W-2 and payroll audits. There's also property records that are held for the life of the asset plus 3 years. That's necessary for basis and depreciation recapture. And finally, worthless securities records have to be kept for 7 years because that's the specific provision for bad debt losses. Now, suppose an influencer hires a contractor, like a photographer, to do some work for them. If the influencer pays that contractor more than $2,000 in a year, the influencer must issue that contractor a Form 1099 NEC. Now, if the influencer fails to file this Form 1099 NEC in a timely manner, which is before January 31st of the next year, here are the penalties. If they're 30 days or less late, it's $60. If they're 31 days late through August 1st, that's a $130 penalty. And if they file after August 1st or not at all, it'll cost them $340. In conclusion, the above examples are only a small portion of what an influencer who's running a business is required to do under the income payroll tax rules. Now, Abraham Lincoln famously said, "The best way to get a bad law repealed is to enforce it strictly." As influencers try to comply with the income payroll tax system, their frustration and upset will grow as they pass these frustrations and upsets onto those they influence. This will awaken thousands of people to the many problems inherent in the income tax system. As more people see the crazy income payroll tax system for what it is, they will support eliminating it and replacing it with the fair tax. The fair tax is the answer. The fair tax is a national retail sales tax on new retail goods and retail services that provides a family credit so that all purchases up to the poverty level for each legal family are not taxed. There's no withholding from your paycheck. You never have to file a tax return telling the government how much you earned and how much you spent ever again, and you'll never be harassed by the IRS ever again because the fair tax eliminates the Internal Revenue Service. Now, many of you have labored tirelessly for freedom from the federal income tax and the IRS. You deserve a great deal of credit for your efforts to educate the American people on the need to fund the American government in a way that's good for America and returns freedom to the American people. It's imperative, though, that we don't replace the current income tax and the IRS with an alternative system that can still be manipulated by the ruling elite. We must let Congress and the President know that the best way to replace the income tax and the IRS is with the fair tax. Now, make no mistake about it. The fair tax is a grave threat to the ruling elites. It will strip them of their power and their ability to control us through the tax system. Their opposition to the fair tax will be fierce and unrelenting. And don't think for an instant they won't use half-truths, deception, and downright lies in their desperate attempts to hang on to their power. However, with the support of this president, we can finally eliminate the income tax and the IRS. Of course, the best course of action is not only to repeal the income tax and abolish the IRS, but to repeal the 16th Amendment as well, so no future administration can ever shackle the American people with an income tax again. We must come together and ensure that real tax reform, the fair tax, is not subverted by the elites in D.C. This will take the diligent effort from all of us. We need your financial assistance and we need your grassroots assistance. Now, if you have contacts that will allow us to get more information about the fair tax to President Trump, please let us know. Please email us at info@fairtax.org and we'll give you some options on how you can best help us. At a minimum, please call your congressional representatives and ask if he or she supports the fair tax. If so, thank him or her for their support and suggest they become a co-sponsor of H.R. 25 if they're not one already. If not, ask why not. Now, if your representative claims to be unfamiliar with the fair tax, offer to have someone come to their office and explain it to them. The solution? Pass the fair tax. Now, why would D.C. pass the fair tax and give up an almost unlimited source of donations? Well, they won't, at least not voluntarily. The only way they will is if the rest of us demand it. Isn't it time to end this ludicrous tax collection system and the IRS along with it? Help us bring about real tax reform and stop future IRS abuses. By contributing or investing $10.40 a month, you help provide a financial base to Americans for fair taxation. Now, if you can make larger contributions/investments, these will be used not for salaries, as we're all volunteers, but for the needed updates to our economic studies, which will be vital for all future years. Please go to fairtax.org to invest in AFFT and help us pass the fair tax. It's an investment in your and your family's future.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans for Fair Taxation. Check back every week for news and information about the fair tax, and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at fairtax.org.